if you think about what Professor Makuchikana was talking about, I just want to make two observations before I move on to make my very short remarks so that we can try to catch up on time. The first one is on credit. Credit, as we know, is crucial for some of the liquidity that our companies and our businesses need. At the Reserve Bank, given the fact that, as Professor Makuchikana pointed out, something like 60 to 80% of our economy is informal, we've realized that at the central bank, there is a need to provide access to credit for small businesses. So because of that, we, a month ago, launched the collateral registry. This capital is here. I don't want to put them on the spot, but I will be coming to find out whether they are using that registry and what their experiences are. Not to punish, not to put pressure on them, but to just learn as we start implementing the collateral registry. What is the collateral registry? The collateral registry allows financial institutions to lend to small businesses using movable property. So you can use your car, you can use your sewing machine, you can use a kettle to get, loans for your business. It does two things. Firstly, it makes lending transparent, for both sides, for both the lender and the borrower. I know there are issues we will have to deal with, but generally that's the idea. And it makes it impossible for the borrower to use the same asset or to overborrow on the same asset. Let me put it that way. And on the other hand, the lender has, of course, collateral that they need. The second issue that we deal with the collateral registry is to make sure that, because you use your sewing machine for your in your business, right? You can't hand it over to Shylocks. You know Shylocks? Chimbazo. And Chimbazo vanotora sewing machine, what can I will give it back to you, right? Sometimes for a very small amount, they take a large capital asset, right? You fail to pay this small amount, they sell out the collateral and disenfranchise the business. So for small businesses, this might seem little things, but they are big things. If you consider the fact that upwards of 60% of businesses are informal. Let me move on to make another observation about the results of the survey before I forget. I think we need to be clear that the survey results or the survey data is up to September the 27th, September 2022. So it excludes almost a whole quarter of this year, right? And if you look at developments in our market, there's been a complete change from about that time to the present. So I think even as you consider these results, please note that a lot of the sentiments that you might see in this report will have changed, even if you go to the same businesses who responded. Lastly, on the observation from our researchers on capacity utilization, let me confirm here today that in terms of foreign currency allotments at the auction, I know we have had a huge backlog around the auction 93 thereabouts, and that backlog had been quarantined. I want to confirm this morning that as of yesterday, that backlog has been cleared completely. So now what we're working on is making sure that once foreign currency has been allotted at auction, we are working on a 14-day turnaround for you to receive. That's the maximum. So the delay in you getting your foreign currency has substantially been reduced. How have we been able to do that? We've been able to do that because if you look at our data, you will find that foreign currency receipts have gone up by something like 25%. Actually, last month, our data was showing that foreign currency receipts, compared to last year, same period, had gone up by 30%. But in this quarter, given that we're tailing off and other fundamentals globally, end of year will probably be around 25%. So there is a net increase in the amount of foreign currency in the system. Okay, so let me now quickly talk about RBZ measures that we've implemented in order to sustain the stability that we are all enjoying. The policy measures being jointly pursued by government and the Reserve Bank are already bearing fruit, particularly in terms of stabilizing inflation and the exchange rate, while also allowing the economy to steadily recover. I want to emphasize what I emphasized a few days ago, that we know that because of the tight monetary policy we are pursuing, something has to give. And therefore, we are aware that growth will be squeezed. But that's the best way to create sustainable growth. If stability is achieved, then businesses like yourselves will be in a position to make positive investment decisions for the future. I was going to mention towards the end about interrogating the results. For example, we found out that business confidence is very low in 2023, right? It's that your index is in the negative, okay? But you go to capacity utilization, right? Projected into the same period. Is it negative or positive? So how is that the case? So you are expecting to use, more capacity, but you don't have confidence. The two. So something else is going on. We are measuring something else with the index. So I think if we try to do some cross correlations, we might find the answer. As the Reserve Bank, we note that the industry, through the State of Industry and Commerce Survey, have provided evidence-based recommendations on key industry indicators such as capacity utilization, ease of doing business, and the business confidence index. This is very welcome and it is very informative for the Central Bank. We take these results very seriously, and our partnership with ZNCC, with the financial sector, and mostly with government, to try and create conditions for further development of our economy very seriously. Despite the pessimism that the survey is indicating, the central bank is committed to continue implementing the tight monetary policy to ensure price and exchange rate stability, which will lead to financial stability in the system. These are necessary conditions for macroeconomic growth and development. So let's get our stability to be sustained, both in terms of our macroeconomic fundamentals and our financial sector, and then growth will come. In fact, I was joking with the minister that my expectations for next year are higher than his, and our projections might indicate otherwise, but I think in my head, business confidence is actually higher than we are seeing in our results today. I may be wrong, of course, I'm not a pro. Formulation and implementation of supportive external sector management policies geared at ensuring foreign exchange adequacy and efficiency in terms of use in the economy is a priority for the Reserve Bank of Zimbabwe. We will continue with an astute supervision of the financial sector, promotive of optimum intermediation to underwrite economic activity. We will enhance the efficiency and reliability of the national payment system in support of general economic activity, and we will increase the number of payment system options that Zimbabweans can get through innovation and digital uses. This includes the survey we are carrying out on CBDCs to just increase the number of ways in which individuals and businesses can transact. We will continue management of a supportive interbank foreign exchange market, and we will continue to review, as you have seen in the monetary policy statement, we will continue to review the interest rates to reflect what's happening on the inflation side of things. I had a diagram. Unfortunately, I put the projection up. But let me talk about GDP a little bit. This year, GDP is projected to grow by 4%. And yes, next year is projected to grow by 3.8%, all things being equal. Sorry, I'm an economist, I have to put that. Nigel will say I'm trying to dodge responsibility, but he knows, since he's an economist, he sometimes forgets that he's an economist. That all things need to be equal for some of these things to hold. But like I said earlier, from where I sit at the central bank, I think that regardless of the current data showing the projection of 3.8, I think it might go over 4%. So let's see what happens. The financial sector remains in a safe and sound condition and able to underwrite significant business, both local and foreign, critical to sustain the positive growth trajectory confirmed by the survey. A functioning interbank market able to meet these needs that I've talked about is indeed in place. Continued fiscal sustainability, as evidenced by non-recourse to central bank overdraft by government, is evidence that we are indeed in a positive trajectory. And of course, we will continue to make sure that there is no delinquency in the financial sector. I talked about an increase in foreign currency receipts, and indeed, if you look at the data, we have had, compared to 2001, a significant increase in foreign currency receipts of over 25%. Foreign payments amounted to 7.2 billion, and it left surplus reflected in FCA deposits. We also have noticed a strong results coming out of new businesses reflective of the positivity we are seeing. Now let me say a word or two about the balance of payments position. You know that we have an improved current account balance since 2019. We haven't had a deficit since. A strong current account balance supports stable exchange rate dynamics and builds confidence. So I want to say to you, don't listen to Professor Makechekana's DCI. Listen to the businesses themselves. And of course, when you see that the dynamics are pointing towards positivity, sometimes we get, is it called self-profit? What is it called? You know, you can, if you think negative, indeed things will go negatively. Yeah. So I don't remember the expression, but self-fulfilling prophecy. Thank you very much. So, but if you think, and here I'm not talking about prophecy, I'm talking about facts, right? We have positive current account balance. We have enough foreign exchange to cover business activity. We have cleared auction backlogs. We can talk about lock funds, etc., but we cleared the backlogs. So there is no reason why we should be pessimistic. And of course, a current account surplus projected in 22 helps sustain current exchange rate stability. It's not by accident. It's because the fundamentals underline that stability. Now, let me also give you evidence of why this is not a fluke. If you look at the data and you look at, say the beginning of the year, the beginning of the auction system, applications were upwards of 50 million, 54 million a week. They have gone down as I speak. On Tuesday, applications were only 11 million. So what is happening? Businesses and individuals are using foreign currency they already had. So there is enough foreign currency in the system for businesses to use their own capital without recourse to the auction. And we can see that in the movement within the financial system. Those who do not, which is a part, I know businesses cry about the surrender requirements and so on and so forth, which is the reason why we have that. Because there are businesses that need foreign currency that do not necessarily generate it. And so the mechanism that we use to provide that so that our economy is balanced and can be sustained is through these foreign resources. On the back of an impressive foreign exchange inflow, a cumulative amount of 3.6 billion was allotted through successive auctions as at 31st of October 2019, and the bulk of that has been cleared. Where has the foreign currency gone? The foreign currency has been allocated to raw materials and capital goods mostly, and only 6% went into medical and chemicals for the health sector. So indeed, the allocations support productive sectors, and we are expecting that these allocations will help boost economic activity. In terms of our financial sector, we know that, and we've repeated this several times, that non-performing loans are down to 1.5. In fact, now they are down to 1.41. And the global benchmark is 5%. So we're well below the global benchmark. So thank you, Professor Magotikana. In your report, you confirmed the same. Now, in terms of the bank policy rate, indeed, it remains at 200%. And of course, before business starts morning, there is indeed a productive sector facility at 100%. So sometimes we tend to look at the negative number and make noise about it. But because we support the productive sector, there is 100% facility that is there for the taking, for those productive sectors that the country needs to support. A word or two about the gold coins. That, by the way, I encourage all of you seated in this room to purchase instead of keeping your foreign currency and your Zimbabwe dollars in your accounts and in your pillows and under your beds. Purchase a store of value that you can have recourse to whenever it's needed, but it's safe, it's sound, and it doesn't cause financial turbulence for the business sector. These have mopped up excess liquidity that would otherwise have ended up propping up the parallel market. So exchange rate stability is going to be buttressed, and as you know, month-to-month inflation has declined to 1.8%, but we are given a tolerance level from the Ministry of Finance of up to 3%. But we are hoping that we can keep it that low. Somebody asked me, whether I can confirm that goods will not spiral out of control towards the festive season, and I said, I don't think so. And because at 1.8 month on month, they shouldn't. The narrowing of the parallel market exchange rate premiums have been positive, and that leads to predictability in the system, in the pricing of goods and services, as well as better business planning for our industry. The reduction in speculative bank borrowing, which was one of the main drivers of the parallel market exchange rate volatility, and thus elimination of excess liquidity in the market, which was hitherto used for speculative behavior on the parallel market. So in short, what am I saying? I'm saying we can all see the positive impact of the tight monetary policy, but it's not just tight, it's also coordinated with fiscal policy. And the impact of the tight monetary policy on the exchange rate is obvious. As I said, there has been narrowing of the premium to tolerable levels of below 15.5%. Actually, as I speak to you, the premium is 15.5%. And internationally, that's about the level that is tolerated by financial systems. The expected trend is something that we all have to watch very carefully. And of course, there are always headwinds, particularly in an agricultural dependent economy like ours, through impact on food security, through impact on the provision of economic activity in rural and farming areas, and so on. RBZ's internal research shows that exchange rate pass-through to inflation is high when the premium is high, and vice versa. So as the premium narrows, so does the pass-through from the inflation, the exchange rate to inflation also goes the other way. As such, the near convergence in the forex market is expected to stabilize prices into the future. So as you plan for 2023, know that this is the case. Now, in the outlook period, what are we expecting in terms of inflation developments? Month-on-month inflation, we expect it to remain under 3%, and annual inflation, as you know, which it has fallen to around 250%, we expect it to decline further. Let me say a word about the annual inflation. The statistics on annual inflation are very dependent on the base. So as the base changes, you will find that that number will fall. And we know it will change because our month-on-month inflation figure has fallen. Okay? So don't worry about the annual inflation yet. Look at the month-on-month figures. The decline in inflation expectations is expected to allow for long-term business planning, efficient pricing, and anchor stability. Consumers will also benefit from stable prices obtaining in the economy. Off the record, I want to show you something here. I know some of you might not be able to see it. If you look at this is a graph of our inflation rate, and this part here is May to August 31st. If you were to isolate this period from here to there, what do you see? See this trend here? It's continuing there. So what we have to interrogate is what happened during this period only. If we find an answer to that, our trajectory remains the same. We're going in a positive direction. So, sorry, I hope I'm not being too nitty-picky, but I just wanted to show you that when you think about business confidence, these are things that you have to think about. That in fact, the global picture is more positive than it appears. That's why I was saying to our researchers, interrogate these findings a little bit further. I know they are quite in line and we agreed with all of them. But let's interrogate these results in order for them to be useful for business and in order for industry to be properly informed going forward. So, what are the risks that we are foreseeing in the outlook period? Of course, administered price adjustments could be a risk, but increased global food and oil prices can lead to imported inflation, and we hope that we can isolate that with the surpluses we can build in the system and therefore to buffer the impacts. And of course, there is always an unanticipated effects. Now let me now come to formal comments on the survey findings. We're happy with the findings, as I said, of the survey, notwithstanding the declines in some of the indicators as compared to 2021. The indicators generally remain positive, and I think the survey was also affected by timing, as I said. But the interest rate hike was necessary, as I alluded to curb speculative behavior, which has been the major driver of exchange rate instability, and the introduction of other measures to complement fiscal policy have given us some leeway to actually introduce other instruments that will continue to facilitate smoother and more prosperous business activity. We believe the measures put in place by both government and the Reserve Bank will be at least less painful than they could be, but necessary for the long-term growth and survival of businesses in our economy. In the short term, however, there is a level of output that will be sacrificed so that we have durable stability in the economy. The survey notes that the capacity utilization increased, averaging 63% in 2022, up from 47.5% in 2021. Increase partly attributable to access to foreign exchange on the auction system, as the respondents or those who apply for foreign exchange now continuously and consistently get the allotments covered within a reasonable time frame. We note the declines in the business confidence index and purchasing manager index, and we are happy that the indicators can be interrogated further, and I think that they will show positivity in the near future. Perception largely influenced by access to credit, and as I said, as you can see, we're continuously looking at that and thinking about innovative ways to solve these issues by the introduction of our collateral registry. The general conclusion we reach is that the economic outlook remains positive as the requisite economic and financial fundamentals for stability are present, though we take note of the business pessimism that the survey indicates. Outlook, however, to be impacted by international developments, intensity and duration of the conflict that's ongoing, but also the positive. Somebody talked about silver linings. Let's look at what we can find as a silver lining in the global conflict that we can see, the Russian-Ukraine conflict. But the important thing to note is that regardless of all this, our economy continues to grow. The survey is a key source of information, not only for us as policymakers, but also for industry. That's the need for continuous improvement in its coverage and its methodologies, but also for continuous participation of you as members that give feedback to our researchers. Government and the bank are fully committed to staying the course of policy tightening so as to safeguard and sustain the current stability. I thank you.